Hello, today we are going to talk about market terminology. And in this video I will show you why. Hello and welcome. Today we are going to talk about market terminologies. This one is really important, especially for the people that are really a beginner on this market business, because this is really a business. It's not a little game, because is your money involved with this. So you don't want to treat this one as a little game. This one is really a business, because there is a profit, there is a loss in this game, and there is a lot of stress involved. Okay, so this one, that is the stock market, and especially there is a lot of trading, that there is a lot of little information, and there is a lot of names that you need to recognize, especially when you're like in a chat group, or when you're listening to somebody online and they say many words, and you don't really understand what are those words. There is one specific word that's called ticker. The ticker is the name of the company, and usually is the name of the stock that usually is between 1 to 5 letter. In America we use letter, in China they use numbers. So usually if Apple, it doesn't get called Apple in the stock market, is AAPL, or Facebook, it doesn't really have a full name on the stock, is FB. Like a General Electric really doesn't have a General Electric name on the whole stock. To be faster is going to be General Electric is GE. Like Ford is F. There is a lot of little abbreviation, shorter name of the whole company with the name. So that will be the ticker. Ticker, that's the company. Another thing that you're going to hear is a ETF. ETF is an exchange traded fund. Now the ETFs, they are groups of stocks put together by big companies, so you can buy an ETFs and you buy lots of different companies. Usually they are great companies, depends what company you are. Sometimes they're the S&P 500, SPY, that's an ETF of the S&P 500. Those are the most and biggest company in America, 500 company in America. You can buy VOO from Vanguard. You can buy a lot of different ETFs. Now, the ETFs are a little more stable than a regular stock. Okay, so being a little more stable is a lot better. But there always can be overextended or overvalue at one point. So you need to make sure that you buy these ETFs at the right time. So you need to have the moving average and see where these stocks are really bouncing at the moment. So you really want to know when is the right time and when is the wrong time to buy an ETFs. After that, you have another terminology. It's called IPO. IPO is an initial public offering. So this one is the first time that this big company goes to the market and is offering their share to the public. So at that point you are allowed to buy this share from this company through a broker. So but that as a beginner, you should stay away from IPOs. Because what in the market, what you really need to know is the past and record of a stock to see what is going to do in the future. So if an IPO doesn't have any past chart, you don't know what's going to happen in the future. And usually IPOs, they go high, there is a lot of manipulation, they come down like crazy, so there is a lot of volatility in the market. Okay, so they're slightly speculative. If it's a good company and is an initial public offering or a bigger company, I will wait about like 3 weeks, because everybody wants to get this IPO. Everybody's so excited, and then when they're in, I was like, I want it out. I don't want to be in this IPO. I want to out. So the stock will fluctuate a lot. So that will be an IPO. ROI, return on investment. That's another big terminology in the market. ROI is return on investment. So if you invest $100 and you make $20 in return, the ROI is $20. At that point, you will have to take also the taxes away, so it will not be a $20, it's $20 minus taxes because you made an investment, you made some return, so you will have to pay the taxes out of that. So, but then I'm not a CPA, so I cannot tell you specifically how much the taxes are going to be. But just for you to know, ROI, that's return on investment. After that, you're always going to hear in the market there is a bull market and is a bear market. The stock market is always a fight between bull and the bears. Okay, the bulls usually they bring the market up. So if you hear bull market, that means it's a green market. Usually color green is connected with the bulls. And bull market means the market was up. Now, if you have a bear market, usually the bear, they're with a cloud, they bring down the market. So usually bear market is connected with the red color, and the red color brings down the market. So it's a bad thing to know there is a bear market, but in both ways, in a bear market or a bull market, you can profit from both ways. You just need to know how first. Now, after that, there is a volatility. That's another terminology in the market that is really important. And volatility is how fast a stock is moving up and down. Okay? So it's kind of like a roller coaster. If you are on this stock and you're going up and down really fast, at one point you're going to get sick and you will get out of the stock at the wrong time. So you're gonna lose money. So to be on a high volatility stock, you really need to be with a lot of experience. Okay. Now after that, we have another terminology, is broker. Broker is a company that allowed you to buy stock. Okay, so these companies could be a Robinhood, could be the Webull, could be Charles Schwab's, could be TD Ameritrade. Okay, any of these brokers, they have a specific way to buy stocks and a specific speed. Because I can say that Robinhood doesn't really have a great speed. That's TD Ameritrade is pretty good quality and good charts. Webull is getting better. But broker is really a company that allows you to buy stocks. Now, right after, another terminology is margin. Margin, at the beginning, if you are a beginning trader, you should stay away from margin because you're not experienced yet. So margin is a loan that the broker will give you to invest. Now, if the stock that you buy is going to go lower and you're losing money, that stock and the company and the broker will call you and they give you a margin call. So they're gonna tell you, listen, you're gonna give us my money back or we're gonna sell all your shares. So you need to settle. So if you are a beginning, please stay away from margin. Okay. Another thing that you really going to hear in the market or when you are trading is a rally. Rally usually is a very high speed way that a stock is gonna go high. So usually we have a Santa rally, a summer rally. There is like few months the rally, the market is rallying, the market is going higher, faster, and that's how rally is coming out as a terminology in the market. Now, right after that, there is another really good word there is parabolic. Parabolic, that is when a stock goes really high really fast. Now that is really dangerous, because when a stock goes really high really fast, usually it goes away from the moving average and from the chart, and at that point there is a problem, because the stocks sooner or later will come down, because nothing goes so fast in a very short time. You know, at one point it's getting tired and it will come down fast too. So after that, there is another terminology that's called FOMO. FOMO usually happens when a stock goes parabolic. When a stock goes so high and crazy, FOMO is fear of missing out. So stay away from that fear. If you feel that you are in FOMO and you feel that everybody goes in that stock and they're making money and you think they're really it's the time to come in, but the stock really went parabolic, and you feel like you really want to buy the stock, it's time to close the computer. Okay, close the computer, go for a walk and relax, because if something already happened, there is a good chance that when the stock went parabolic, it's going to come down like there is no tomorrow. Usually there is, they say that the market takes the window when the market comes down, and when it goes up the market, it takes the elevator. So when it goes down really fast. And if you have a stop loss order on that stock, maybe sometimes the stop loss order is not going to work, because the broker is not going to even have a time to enter your order and catch the stock going down. So you don't want to get a falling knife on your hand. Okay, that's another terminology, a falling knife. That's when you see that this stock or something that you bought that went really high is going to fall down so fast that you try to catch a falling knife. That is not good. Now, another thing that you're going to hear as a terminology, and is going to be EMA. Those are exponential moving average. Now, exponential moving average is very close to SMA. That will be simple moving average. Now, those are calculated by the computer very easily, and usually you can put the EMA or the SMA to a 20, 50, 100, 200. So the computer automatically will calculate the last 20 closing of the candles in the market and will give you an average price that where the stock should be at the moment. Now the 20 candles, or if you have the EMA on the 50 candles, it should be the last 50 candles. If you have the on the 100 candles, should be on the last 100 candles. So the computer automatically will give you a calculation on a price that the stock should be. Now, what's the difference really from EMA to SMA is the EMA, the exponential moving average, they react a lot faster than a simple moving average. So EMA, they will ring that bell faster than SMA. So they will tell you the EMA that you might lose money, and they will tell you right away. SMA will take you a little more time, slightly more time, but not too long. Now, those are few terminology that you're going to hear in the market. I hope you enjoyed this video. Next time, we're going to come up with more terminology for the market so you can understand the market better and communicate with other traders a lot better. At this point, I'd like to thank you very much for watching my video. Please click the like button, subscribe to my channel, and thank you for watching.